Hello guys and welcome back to the channel. So in this video we're going to talk about the truth of the Palantir Share Buyback. So this is going to be a very good video because we're going to go over what the share buybacks are with a fantastic, it's going to be really good. And then we're going to take a look at why Palantir should and shouldn't do share buybacks. So stay with me, make sure you're subscribed. You can follow me on X at @VinceIsBullish and you can talk to me there. So the retail doesn't fully understand what share buybacks are, and to be honest, a lot of people don't understand, so I feel that we need to take that up first. Tom Nash tweeted this, that he received a comment on one of his videos. How can you invest in a stock with $1 billion buyback? Talk about diluting your shares. And he wrote, where do I start? And this was so funny to me that I had to ask him, like, was this an AI generated meme? And he was like, unfortunately, this was a real comment. Okay. So to go over what stock buybacks are and how they actually work, I want to show you a video by this guy. This is a fantastic channel, by the way. It's a pretty small channel, but bigger than mine. And I think this guy doesn't get enough love. He does insanely good valuations. He explains certain concepts insanely well, and I want to show you a quick segment of the video that he does about share buybacks, because a lot of people don't understand share buybacks.
Hello there and welcome to this week's casual educational video. The topic, as you can see, is share buybacks, a topic that in my opinion is fairly simple and straightforward. However, even though there's a lot of resources on what it is, there's not a lot of resources on the impact that it has on the shareholders' value. Now, I noticed that the media oftentimes portray this as a positive event that creates value for the remaining shareholders, but that is something that is not always the case, and I'd like to elaborate more on that through an example. And the example that we have is a company that I've just invented. Its name is TBC, short for the best company, and it's worth $500. So we have a mature company that has excess cash, that doesn't have any opportunities to invest this cash in, and of course, keeping the cash doesn't create any value. If anything, in times when the inflation is fairly high, it destroys value over time. So the question is, what can the management do with this excess cash? Obviously, dividends is an option that is always there. It is something that is more recurring, whether that's quarterly payment or annual. But this is a bit of a different case. They want to create value for the shareholders, right? This is the story of the media by buying back shares. Now, if you take a look at the ownership, we have 5 shareholders, each one owning 20% of the company or $100 worth of shares. And for a buyback to happen, somebody should be willing to sell their shares. And in this case, we have somebody, his name is Peter, says, look, if I get a good offer, then I can put that in use. I can invest in other companies and I'll be happy with that. So on the open market, that's where normally, or in most cases, buybacks happen. There's another option of buying back shares by a tender offer, but in this case, we'll keep it simple. Peter is willing to sell the shares, and the question is, what is a fair value? Now, obviously, if the company is worth $500 and each one owns 20%, $100, then that is the fair price, that the fair dollar amount that Peter should receive. And if that happens, right, this is basically a share buyback at fair value. So what happens to the remaining 4 shareholders? Their ownership has increased from 20 to 25%. They each own $100 worth of shares because the company as a whole now is worth $400. It was worth $500, but there's $100 less cash. Therefore, this is a share buyback at a fair value, and we're going to take a look at what happens with this share number 5. Now, let's assume that Peter has run his model and says, you know, I'm not very comfortable holding this share. I'm not that optimistic about the future. So I'm happy with receiving even $60 for my ownership. And if this happens, and he's wrong in his assumptions about the future, well, the ownership still increases from 20 to 25% for the remaining shareholders. But if the actual fair value was correctly calculated before at $500, now at $440 after paying the $60 to Peter, the ownership, the value of the shares or the individual shareholders has increased from $100 to $110. So this is a share buyback below the fair value, and it happens only if somebody is willing to sell his or her shares below the fair value. But let's assume that there's a third scenario where actually the management is very optimistic about the future of the company, and they decide to pay Peter $120 because they believe the company is worth a lot more than the fair value. In this case, that's $500. Obviously, the challenge here is estimating the fair value in the first place. Therefore, answering the question whether this activity creates value, destroys value, or is neutral is not an easy one to answer, and it's not one that should be answered within a minute by anybody who hasn't done really a deep dive into the company to really understand its fair value. But if this is the case, so if Peter receives more cash than the fair value of his shares, then even though the ownership again goes from 20 to 25%, the value of the shares for the remaining shareholders has decreased from $100 to $95. So in a nutshell, share buybacks can create value, can destroy value, or can be neutral. It is one way to return capital to the shareholders, and the way that it is being returned is now they own higher ownership, which means they have a higher percentage, higher proportion of the future earnings of the company.
So this was the video. It's again, I will link this guy's channel in the description box below. Really good channel. Highly recommend that you check it out. And this illustrates that the share buybacks is not necessarily a good thing or a bad thing. It depends on if the management is doing it at fair value. And he said that the question is who should establish the fair value. And even in the example that he gave, he said management can be very optimistic about a company and then overpay for the shares, and that would destroy value for shareholders. So is the Palantir stock buyback a good or bad thing? So what I have seen on Twitter and what folk have been saying is Palantir is playing the Wall Street game and this is bad. Okay, the truth is that Palantir as a company, for us long-term investors, needs to retain talent. And the only way to attract this talent is to offer them shares, meaning they need to have stock-based compensation. And again, there's just no two ways around it, because then these top talent engineers are going to go to other companies like Apple, Google, who do offer stock-based compensation. So if Palantir would just pay them very high, they would not get the top talent, right? Then Palantir has had this problem that their stock price was low for a very long time and below IPO. That makes the employees less motivated, right? The morale can go down. So they, in a way, do need to play the game to increase the stock price of the stock. And it's not good or bad. It's just that is the game, because otherwise you will start losing employees. And I mean, to be honest, who doesn't want the stock price to be up? Okay, so this is not good or bad. And by the way, Apple is also buying back shares. Microsoft is buying back shares. Google, I believe, is buying back shares. Enphase is buying back shares. So are these guys also guilty of some conspiracy theory? No, it's a completely normal thing. So chill out. Then the next thing that I see is that folk are saying that why use the money on stock buybacks when you should use it on marketing to get more customers or acquire another company. And here's the thing. So Palantir has operational profits now of 10 to 40 million. Let's say they would increase the marketing budget. Like, how the heck would they blow through $1 billion on marketing? I think that that's impossible to send. And on top of it, what do you think they should be doing other than what they are doing right now? They're doing, I don't know, like 10 to 12 AIP, Foundry, whatever cons. They are, advertising. They're growing a sales team. I mean, they cannot run a Facebook ad to the general audience like, hey, why don't you want to try Palantir? Because they have a very targeted audience, and it's very few people and very few companies that can actually buy from them. So I don't really see this point. Now, here's the thing on acquisition. So again, this is a very bullish point, because unlike Snowflake, Palantir actually innovates, and I don't know if you noticed, they have a very solid ground product offering that is really easy to make other products on. For example, they had their Gotham government product, and then they said, this could be used commercially. So like within a year, they developed Foundry, or within a very short time, they developed Foundry, which was based on the earlier system, right? And then ChatGPT came out. They saw that this is their Oppenheimer moment, or whatever they saw. And within a few months, they were out with this new AIP product, okay? Because they're innovating, they don't need to be wasting billions in acquiring other companies, because they have the best talent on the planet, and they can just develop these products in-house. So they definitely shouldn't need the money to acquire other companies. Snowflake is different. They have a very good sales team, but they don't really have the products. So the only way that they can get the products is they continuously have to acquire new companies that have these products in them, okay? So I disagree with this argument, because I don't see where Palantir could blow through $1 billion in marketing or acquisition that would be good for the company and not something that they are already doing. So now the other option would be with the money is to keep it in the bank and, you know, start getting that juicy net interest income, which is 5% risk-free currently, and that would be an interest income of $50 million per year. But obviously, as we saw in this video, if they are able to buy back the stock below fair value, then they will be creating more value for the shareholders. So I think Palantir definitely does have enough money to do the stock buybacks because they are generating free cash flow every quarter. They don't need to acquire other companies. They're doing everything right, I believe. So this is a very, very bullish sign. But I think it's very stupid to do the stock buybacks at $20. So what is the fair value of Palantir? And again, they didn't say that we're going to start buying back stock at $20. They said that they have the authorization to buy back stock. So now we plummeted 25% from the highs. And maybe this is a good time to start buying back stock and create value for investors. Jeremy, Financial Education, made a really, really good point that Apple, for example, waited for a very, very, very long time before they started buying back shares. And if they would have started buying back shares earlier, then they would have created a lot of value to shareholders because of how much the stocks went up. So if management is very, very sure and optimistic, and I mean, they see their company, I mean, they have the most data out of all of us. And this could be a potentially very bullish sign, and they know that the stock is going to appreciate super much in the future, so they just go ahead of this trend. But I don't have that insight as they do into this. So the buybacks is not a good or bad thing. If it's executed below the fair value, it creates value to shareholders. Palantir definitely has the money, and they don't need more money to fund their operations, so they can do this. So we just need to hope that the management has the insight, and we need to trust them that they do it below fair value so that they create a lot of value to us as long-term shareholders. So thank you so much for watching. Please make sure you're subscribed, and I'll see you in the next video. Ciao, ciao.